Hi, it's Andy Hoffman, Marketing Director of Miles Franklin Precious Metals in our 26th year in business. It's morning of Thursday, July 16th, 2015, and the title of this week's audio blog is The Stench of Collapse. Now, today's audio blog is actually a two-parter, with the first half written Wednesday after the market close and the second Thursday morning. It's now Wednesday afternoon, and I'll let you know when I get to the Thursday morning section. Okay, where to start? For one, the Greek parliamentary vote to approve or disapprove Alexis Tsipras' betrayal to the Greek people is mere hours away. And despite, as always, propaganda supporting the powers that be's desired outcome, i.e. approval of the horrifying, Greece-destroying €86 billion bailout deal, markets are betting otherwise. Watching National Bank of Greece's stock, which has lost all its post-agreement gains, something tells me said vote is going to be a lot closer than said powers that be would like. As I write, it's 5 minutes to midnight in Greece, which means 5 minutes from missing yet another deadline. This time, the Troika's deadline of Greece's parliament ratifying the heinous terms of its latest bailout proposal. Not that deadlines seem to matter anymore, but given that this so-called slam dunk vote is still being debated at midnight, 10 hours following its commencement, should tell you just how unstable the situation is. Meanwhile, as the mainstream media discusses said deal as if Greece will be fixed with it, the very participants in it claim otherwise, from Christine Lagarde of the IMF to Jean-Claude Juncker of the European Commission, both of whom, in the past 24 hours, i.e. with the Greek vote hanging in the balance, expressed doubt Greece could ever pay back said bailout without massive amendments to its terms. You know, like extending all Greek debt out 30 years, which the last time I looked defined a default. Meanwhile, at least 6 EU members must have said deal ratified by their respective parliaments, including the German Bundestag, which doesn't return from vacation until Friday. Already, the Finnish minister expressed his desire for the deal to be struck down, and as for others, such as Sweden, their finance minister claims to want, quote, guarantees in return for a new Greek bailout. To which I ask, guarantees of what? Further collateral, so to speak, atop the €50 billion worth of Greek islands, airports, and infrastructure the proposed liquidation fund is already demanding? I mean, just how enslaved are the Greek people expected to be? And this barely a week after 61% of them voted against a less onerous deal than the monstrosity Alexis Tsipras subsequently bargained for. Oh well, either Greece collapses now or in a few months, when not only are most of the bailout funds, which were supposed to last 3 years, gone, but it becomes painfully clear that Greece's government, which will likely have been overthrown by a new, significantly more malevolent force, not only has no intention to repay it, but openly laughs in the Troika's face. And this, whilst the global economy, and particularly Greece's, is several months deeper into the freefall that is gaining steam with each passing day. Not to mention several months of heightened social and geopolitical tensions culminating with Spain's presidential election in December, widely expected to be won by the newly formed Podemos party, which has the same anti-Euro intentions as Syriza. In other words, by year-end, it's entirely possible that the concept of Grexit is heavily overshadowed by that of Spexit, and next year, Brexit, Italexit, and Portugexit. As for said economic collapse, this week's Iranian peace deal, which I say in quotes as the world will be no more peaceful as a result, but to the contrary, far less so given the dramatic, likely indefinite plunge in oil prices, I have not only vehemently expressed my belief it would get done, again, contrary to media expectations, but that it would launch the next phase of the hideous crude oil bear market. And as I wrote in October's Crashing Oil Prices Portend Unspeakable Horrors, when, by the way, WTI crude was $81 a barrel compared to $51 a barrel today, the global, political, economic, and social impact will be catastrophic. In Obama's blind ambition to recreate Jimmy Carter's miraculous Camp David peace accords and take credit for plunging gasoline prices prior to next year's elections, he has sentenced a global economy dependent on oil revenues to death. Although frankly, I have no issue with Iran being allowed to sell its oil, as America is not the God-given arbiter of who is allowed to own nuclear weapons. I mean, seriously, Iran is too dangerous to hold nukes, but Pakistan is not? And by the way, yet another unintended consequence of establishing a so-called peace with Iran is the geopolitical enemies such a deal has made as a result. starting with key strategic allies like Saudi Arabia and Israel, and extending to enemies within like Donald Trump, whose surge to the top of the GOP polls has been atop a platform of racial and ethnic hatred, including Arabs, as his preference is not to establish peace, but to, quote, bomb the hell out of the Iraqi oil fields and have ExxonMobil rebuild them. That said, as I've written endlessly, oil and gas now accounts for a third of all U.S. corporate capital expenditures, as well as all net job growth, outside waiters and bartenders, of course, since the 2008 crisis. Not to mention that said jobs are amongst the nation's highest paying, so not only will the resultant collapse in energy-related spending annihilate what's left of the BLS's fraudulent employment recovery, but it will take real incomes already at 4-decade lows to new unprecedented lows with no hope of recovery. In the past 2 weeks alone, the oil PPT I've been writing of, which took WTI crude from its February low of $42 a barrel to $62 a barrel in June amidst an unending litany of bearish oil developments, has been soundly defeated, with prices closing today around $51 a barrel. Over those 4 months, a slight bit of confidence was starting to return to the oil sector, as evidenced by rising rig counts in the past 2 weeks following 5 months of declines. However, with prices now poised to breach $50 per barrel anew and likely challenge $40 by year-end, one can almost hear the air coming out of the Hope Train's tires, or, per the title of today's audio blog, smell the stench of failure. Not to mention failure of the parallel copper PPT to convince investors that the world's most widely watched industrial commodity was, quote, recovering, as not only has Dr. Copper, or as I last year deemed it, Dr. Death, fully round-tripped the past 4 months' ridiculous copper PPT-inspired surge from $2.45 per pound to $2.90 per pound, but with the global economy collapsing, London Metals Exchange copper inventories having doubled in the past year, and COMEX copper inventories nearly doing the same in the past month, the potential for copper plunging all the way to its 2009 low of $1.50 per pound is quite possible. And with it, the rest of the base metals, which, by the way, are where 2/3 of all global silver production emanates as byproduct from. Which is why it's so comical that, as depicted in this morning's article, Conspiracy or Madness, paper silver has been the worst performing metal since the U.S. Mint again sold out of Silver Eagles, amidst an historic demand surge that has only accelerated since, as evidenced by Miles Franklin being amidst its best month since, what a shock, May 2013, right after the vicious alternative currencies destruction paper raids that coincidentally followed the now infamous closed-door meeting between Obama and the top too-big-to-fail bank CEOs. Of course, just as it is guaranteed that Greece will fail, it is equally guaranteed the gold cartel will as well, or as I call them, the New York Gold Pool, just as the London Gold Pool did in 1968 and all other historic attempts to suppress real money. As I write, global gold and likely silver demand is at an all-time high, while its inventories are at record lows. And as I wrote in yesterday's Mining Armageddon article, as well as countless others like it, there is no doubt in my mind that if prices don't materially recover by year-end, several of the world's largest gold and silver miners will experience write-downs so draconian, bankruptcies and or significant cost-cutting mergers will engross the industry like the plague. All one has to do to realize this is watch the hideous collapse of gold and silver mining stocks, which for 4 years, following 5 years of having worked in the industry, I have vehemently, passionately warned of. Back to the week's heinous cartel raids, launched simultaneously with equally blatant PPT efforts to defend equity prices, they are occurring amidst an endless litany of wildly bullish precious metals and equity bearish news. Starting with the highly unstable Greek situation, which will only worsen with each passing day, whether or not the current bailout monstrosity is passed. Throw in the expanding Chinese stock crash. As I write, thousands of stocks are halted following last night's limit down plunge, amidst an equally cataclysmic Chinese economic implosion sure to go parabolic in the coming months. And this despite the most draconian, overt government, quote, support measures imaginable, essentially making the U.S.'s 2008 TARP bailouts, FASB accounting changes, and Fed secret loans appear tame by comparison. Throw in expanding currency crashes the world round, in which hyperinflationary monetary policies are in many cases being compounded by the horrific effect of the aforementioned catastrophic commodity crash, particularly as relates to crude oil, and you can see just how endangered the most overvalued equity, fixed income, and real estate markets in history have become. Heck, even Canada joined the final currency war party this morning, when the Bank of Canada not only dramatically reduced its 2015 GDP growth expectation to negative territory, but unexpectedly reduced interest rates to one notch above zero. And this before crude oil, by far the biggest contributor to Canada's economic implosion, plunged from $53.50 per barrel to nearly $51 per barrel. Consequently, the Canadian dollar plunged to a 6-year low, putting loonie price gold within 18% of its all-time high, compared to 40% here in the United States of dollar destruction. Which is probably why all Miles Franklin blog readers in commodity currency nations like Canada, Australia, and Russia, to name a few, are happy, just as those in paper-manipulated countries like the US and UK will be shortly. And last but not least, Janet Yellen's semi-annual Humphrey Hawkins congressional testimony was at best pathetic and at worst depicting an institution that not only has lost all credibility but has leaders with as little understanding of communication as they do economics. To that end, yet again, the pre-testimony propaganda spoke of how hawkish JY would be, despite the fact that since February's testimony, which I subsequently deemed the most unequivocally dovish FOMC statement in memory, all manner of global economic hell has broken loose, the least of which being the States itself, which not only reported negative first quarter GDP growth, but has since witnessed across-the-board plunges in essentially all economic categories. Not to mention in the most rigged economic report of all, NFP employment, which in June was reported to have seen the second largest monthly labor participation rate plunge in 20 years, to its lowest level since 1977. That said, Whirlybird Janet's prepared remarks were more of the same, we will raise rates if the economy recovers and if the global political and economic environment is conducive. In fact, under normal manipulative circumstances, precious metal prices would have actually soared in response to such blatant dovishness. But not today, of course, given the Greek vote, collapsing oil prices, and oh yeah, physical demand so strong, the U.S. Mint ran out of silver. Moreover, what I witnessed this morning whilst at the gym, which I went to after writing my article and taping my weekly Kerry Lutz podcast, had even me speechless, which was watching CNBC, which is always playing on one of the gym's TVs despite no one any longer watching it, trying to paint her comments as hawkish. Not that anyone should be surprised, as I have long called CNBC's clown economist Steve Leisman the John Hilsenrath of TV, in that he, like Hilsenrath of the Wall Street Journal, are clearly paid by the Fed to claim the economy is perpetually expanding and that, due to said recovery, which in reality exists only in the government-rigged financial markets, the Fed is always on the cusp of raising rates, and thus proving 7 years of ZIRP and QE were successful. Which, by the way, is in and of itself a dubious strategy, as the last thing an historically indebted society needs, let alone historically overvalued financial markets, are higher rates. Heck, at one point, CNBC, while scrolling Yellen wants to raise rates, broke away from famous bond investor Jeffrey Gundlach's vehement commentary of how the Fed can't even consider raising rates until 2016. Yeah, right, during an election year. Anyway, they broke away to Leisman, who claimed to have breaking news that Janet Yellen was indeed claiming to be ready to raise rates. And this, as rates were plunging. No matter that, as noted above, her prepared comments couldn't have been more dovish. Or, as I said, that markets rates were falling at the time, as Leisman is being paid good money to lie. And when he showed a clip of Yellen answering a question in which, again, she simply claimed she would raise rates under the right circumstances, I nearly lost it. In a nutshell, her comments couldn't have been more dovish, with the only two people on the planet trying to spin them otherwise were, not unexpectedly, Leisman and Hilsenrath. Well, that's enough for today's Comedy of Lies, as it's roughly 4:55 p.m. Mountain Standard Time, and I'd like to actually relax. Of course, it's 1:55 a.m. Athens time, and per Zero Hedge, the Greek parliament is still amidst a vicious debate, which, propaganda notwithstanding, could lead to yet another Greek oxy vote in the coming hours. Oh well, I guess we'll just have to wait and see if tomorrow is Greece's Jimmy Shaker Day, for those who have seen the great Mel Gibson movie Ransom, or sometime shortly thereafter. I look forward to seeing, either way, the outcome when I awaken tomorrow and immortalizing it in this audio blog. Okay, it's now Thursday morning, and before I start, let me relate an experience I had last night, which made me both happy and wistful. After an hour of staring at depressing stories on my tablet of Greece, propaganda, and my poor injury-riddled New York Mets, I went upstairs to watch one of the few television shows still worth watching. Sure, a handful of new shows still keep me compelled, like The Good Wife, Big Bang Theory, Amy Schumer, and Louie. But for the most part, television has descended to the depths of depravity, catering to a soulless society with little interest in self-advancement. Reality shows, gossip columns, and any opportunity to embarrass or exploit with a candid camera are what sells. In the words of Bruce Springsteen, 57 channels and nothing on. Only now, it's more like 5,700 channels of futility. That said, when Star Trek The Next Generation came on, I gave a huge sigh of relief and sat back, half asleep, to watch one of the best scripted, acted, and choreographed dramas of our time. For the record, I'm a huge fan of Star Trek Voyager as well, but TNG is by far the best of the Star Trek franchise, and Jean-Luc Picard, its best captain. In the episode I watched, Picard and Commander Riker debate to save Lieutenant Data's life, in a mock court charging Data to not be a man, but a machine owned by Starfleet. In other words, a pseudo-debate about slavery, featuring some of the more compelling dialogue and acting of the drama genre. In the end, Picard proved Data's humanity in a feel-good ending that put me to sleep happy, hopeful, and rested. Fast forward to this morning, when the polar opposite was true, in learning not only of the corruption and complicity of those charged with protecting mankind's interests, in China, where the PBOC is desperately trying to save its stock market, Japan, where a 25-year low in real wages was reported, and Europe, to name but a few, and I was depressed all over again. Not that I don't have hope for mankind, but certainly none for the current political and economic regimes that negatively affect so many lives. To think that after a passionately argued, at times vicious 12-hour debate, 78% of Greece's parliament voted, obviously including most of Syriza, to ratify the heinous austerity bill Alexis Tsipras acceded to, 2 days after passionately imploring the nation to reject a far less harsh version, is beyond contempt and beyond mere betrayal. Combine this result with reports that Tsipras actually called the referendum with the expectation of a yes vote, and you can see that he too was likely compromised from the beginning, either, as he described it yesterday, at knife point, or by his own fear and cowardice. Either way, Greece's days as a sovereign nation, at least until the coming, potentially bloody revolution, are decidedly over. In Yanis Varoufakis' terms, a now vassal state of the German-led Troika. This morning, the supposedly violently anti-bailout Finns ratified as well, as will the Germans tomorrow, despite, as I added, the German finance minister publicly not only voicing skepticism of said bailout, but preferring a Grexit scenario, enabling the ECB to print another 86 billion euros and hand it to the Greeks, who will immediately hand it right back, in what can only be described as one of history's most virulent inflationary Ponzi schemes. As I have been saying for months, a Grexit outcome is guaranteed, if not today, certainly sometime soon. To wit, it shan't be more than 9 months or so before the majority of said 86 billion is gone, not to mention Syriza, Alexis Tsipras, and any semblance of radical but peaceful Greek politicians, let alone the spillover to Spain, Italy, France, and countless other nations empowered by the Greeks' 61% oxy vote. As bailout or not, Europe's economy and financial situation will worsen dramatically in the coming months and years. Not to mention, as the euro continues to plunge into the abyss, which, contrary to what the so-called pundits predicted, is occurring this morning with a vengeance. As I write, the euro is down to 1.086 to the dollar, barely 3% above the 11-year low achieved just 3 months ago, attesting to the inflationary death sentence said Troika has imposed on 330 million euro-using Europeans, and another 200 million whose currencies, many in third world nations, use currencies pegged to the euro. Not to mention untold billions whose currencies, too, are being caught up in the final currency war I warned of 2.5 years ago, of which the ECB is as engaged as any central bank on the planet, per the statement it made this morning of the indefinite holding pattern its current suicidal NERP and QE schemes are amidst, which, by the way, are now so large, said bailout amounts to but a single month of roughly 70 billion euros per month QE that the ECB commenced in March, to remain in place until at least September 2016. In other words, said bailout may in fact be more destructive for Europe than the alternative, as now that the currency markets realize the ECB's plan is not only to print euros into oblivion, but to do so at knife point if necessary, it will only accelerate said final currency war to new heights of inflationary frenzy. As I write, the dollar index is on the verge of taking out 98, on its way to the 11-year high of nearly 101 set a few months back. And on its heels, countless currencies are being slaughtered anew, from those tied to Europe like the Swiss franc, to dozens of global commodity currencies like the loonie, Aussie, and ruble, to those, plain and simple, managed by inflationary madmen, as in India and Japan. Which brings to light the potentially cataclysmic issue we have been warning of for some time, which is the catastrophic impact a surging dollar has on China, whose suicidal dollar peg is sentencing its export-driven economy to a deflationary death, just as it hits its lowest growth rate in 35 years. Whilst, oh yeah, its historic equity bubble is amidst a horrific crash that has already wiped out trillions of margin-enhanced wealth in the past month alone. In other words, pressuring the PBOC more than ever to remove the peg to preserve China's competitive position, although in reality, such a strategy is far less effective than scripted. And now that commodities and currencies alike are again in a massive downtrend, the PP-enhanced euphoria of said Greek deal will likely be in the rearview mirror in the blink of an eye, putting the world back to the state of terror it was in earlier this year. Only this time, Greece has another 86 billion euros of debt, putting its debt-to-GDP ratio above 200%, which will likely foster unprecedented social unrest, and as the euro continues to plunge toward dollar parity, the rest of Europe will become equally angry as its economy implodes further. And the worse things get, the more upward pressure the dollar index will experience, which not only will further pressure the PBOC to devalue the yuan, but the Federal Reserve to end its two-plus year propaganda campaign of potential rate hikes, in lieu of not only rate declines, but a massive QE4 program to both stimulate, LOL, the U.S. economy, and put it back in the race to win the final currency war. To that end, in reference to yesterday's comments about Steve Leisman trying to convince us the economy is recovering, and you should see today's Philadelphia Fed index, which plunged from 13 last month to 5, how ironic is it that this morning, just as Whirlybird Janet is about to commence her second day of Humphrey Hawkins' congressional testimony, the White House itself dramatically reduced its 2015 GDP growth expectation, double seasonal adjusting and all, from 3% to 2%, which, if realized, would be the nation's worst economic result since 2008. Not to mention, amidst an environment of dramatically higher inflation, no matter how hard the government works to underreport it. Again, as I stated back in October, when QE supposedly ended, LOL, once this Yellen reversal occurs, it will be game over for the world's central banks, and with it, the historic fiat Ponzi scheme they have poisoned the planet with. As for gold and silver, don't for a second forget that as I write, global demand for actual physical metal is at an all-time high, whilst physical inventories are at an all-time low. And as for future supply, 15 years of suppression have already sentenced the mining industry to an irreversible death, as described in Monday's must-read article, The Direst Prediction of All, Part 2, Mining Armageddon. Just look at the stock of Harmony Gold Mining this morning, i.e. the world's 11th largest gold producer, which looks ripe to be the first of many major precious metal mining bankruptcies, to realize just how far this flaming envelope has been pushed and how close we are to the shortage that will permanently end your ability to protect yourself from the hyperinflationary nightmare that for some has already arrived and for the rest, particularly here in America, will be here shortly. What's that you say? We already have shortages? Oh yeah, that's right. Last week, the U.S. Mint again suspended Silver Eagle sales due to a record demand surge, causing premiums and delivery times to expand. I mean, what more do we need to say to convince you to protect yourself now than that amidst the most vicious paper cartel raids to date, not only is physical supply vanishing, but the mining industry itself? To that end, we can only reiterate as vehemently as possible that the time is now to protect yourself while you still can. Here at Miles Franklin, we've conducted business for 26 years without a single registered complaint, and can help you not only with the purchase, sale, or storage of precious metals, but a variety of financial planning strategies we have honed over 2 decades of working with gold and silver. In fact, not only did I tape a podcast with Miles Franklin's president and co-founder, Andy Schectman, earlier this year to describe such strategies, titled Swaps, Trades, and Repatriations, which you can find on our website or Google, but last week taped State of the Bullion Industry, in which Andy speaks of matters investors must be aware of in this current volatile environment. As for Miles Franklin, all we ask is that you give us a call at 800-822-8080 and allow our staff of professionals, on average sporting nearly 25 years of industry experience, to give you a free consultation. And as always, I can be reached via email at ahoffman@milesfranklin.com. Last but not least, I figured I'd end with a Nostradamus-like quote from, of all people, one of the disgraced Barings bankers from 1997, a mere 2 years before the introduction of the euro. Here we are just 18 years later, and not only has his view been justified in spades, but may well presage an imminent end to the euro itself. Quote, Germany will be subsidizing scroungers, lounging in cafes on the Mediterranean beaches. Monetary union, in the end, will result in a gigantic blackmailing operation. When we Germans demand monetary discipline, other countries will blame their financial woes on that same discipline, and by extension, on us. More, they will perceive us a kind of economic policeman, and thus we risk once again becoming the most hated